Tesla is slated to announce their Q1 2020 financials later this month on April 29th. This is arguably the most important earnings call for Tesla this year, as it will offer a glimpse to the effects of COVID-19 on their business. And in this video, we'll explore how their financials might look like. On April 2nd, Tesla released better than expected production and delivery numbers. They delivered approximately 76,000 Model 3 and Y and 12,000 Model S and X for a total of 88,000 vehicles delivered. Last quarter, Tesla delivered approximately 112,000 cars with an average sale price of $55,000. With an average sale price of $54,000, automotive sales and leasing revenue should be $4.8 billion and $158 million respectively. I calculated leasing revenue using the same leasing to sales ratio in Q4 of 2019. This puts automotive revenue for Q1 at $5 billion. For Tesla's other business, I use the same values as Q4. This is because I want to make as few assumptions as possible. However, the actual values might be lower due to seasonality demand and a factory shutdown during the last week of March. This brings Tesla's total revenue for Q1 of 2020 to $6 billion. Moving to cost of revenue, the biggest assumption I'll be making is that automotive gross margin will be approximately 22%. During the Q4 2019 earnings call, Zach, the CFO of Tesla, said,
"Please keep in mind that the industry is always impacted by seasonality. Additionally, we are in the process of ramping two major products, Model 3 in Shanghai and Model Y in Fremont, which I expect will temporarily weigh on our margins.
Realistically, I expect automotive gross margin to be between 20 and 22%. Using 22% as a baseline, we can back calculate the automotive gross profit and total automotive cost of revenue to be $1.1 billion and $3.8 billion respectively. To break out the costs associated with sales and leasing, I use the same sales to leasing ratio as Q4 of 2019. This puts cost of sale and leasing at $3.7 billion and $126 million respectively. For Tesla's other business, I kept the cost the same as Q4 of 2019. The actual values might be slightly lower due to lower seasonality demand and factory shutdown during the last week of March. This puts total cost of revenue and gross profit at $4.9 billion and $1 billion respectively. Moving to OpEx, the values should be fairly consistent with Q4 since Tesla greatly slimmed down during 2019. The only difference between Q4 of 2019 and Q1 of 2020 is no restructuring costs in Q1 of 2020. This puts OpEx at $1 billion and income from operation at $40 million. Combining everything together, we can calculate net income for Q1 of 2020. Keeping the interest and tax obligations the same as Q4 of 2019 gives a net loss of $178 million and GAAP earnings per share of negative 0.93. As a summary, here are the key numbers for the base case where automotive gross margin is 22%. If we adjust the gross margin to 20% due to seasonality and Model Y ramp up, we get the following range of numbers. At the low end, we have an earnings per share of negative 1.59 and a high of negative 0.93. So what does this mean? Will Tesla post a beat? According to Nasdaq.com, the Wall Street consensus is currently negative 1.22 with a range of negative 2.04 to 0.18. Our estimates are consistent with the current Wall Street consensus. However, because of the coronavirus outbreak, guidance will matter more than the actual earnings number. Will Tesla stand by its earlier guidance of 500,000 vehicles delivered in 2020, or will it offer a revision? This is the question most analysts will have and will be a main driver moving the stock price after earnings. And that's it for now. Let us know your predictions down in the comment sections. See you in the next video.